At first glance, Missouri's housing market still feels steady. Listings are active, prices haven't collapsed, and conversations sound calm enough to feel familiar. Agents still talk about demand. Homes still get showings. Nothing appears broken, and that surface normalcy is exactly what makes this moment difficult to read. Because when you look longer, something subtle feels off. Interest shows up, then stalls. Buyers tour homes, ask careful questions, and step back instead of leaning in. Homes don't fail loudly, they linger. Sellers feel comfortable assuming time is neutral, while momentum thins quietly underneath them. That contradiction creates unease people struggle to name. We're trained to watch prices for truth. If numbers haven't dropped, nothing must be wrong. But markets don't slow when prices move. They slow when behavior does. And behavior across Missouri has already shifted in ways that don't announce themselves. If you've been paying attention, you've likely felt this before you could explain it. Showings without offers. Conversations without follow-through. Qualified buyers who hesitate without drama. Nothing feels alarming, yet decisions take longer and outcomes feel heavier than they should. That tension isn't noise, it's information. What's slowing the market right now isn't fear or financial stress. It's hesitation. Buyers aren't rejecting homes emotionally. They're delaying commitment. They're verifying assumptions, protecting flexibility, and choosing patience in places where speed used to feel rewarded. That shift doesn't show up in headlines. It shows up in timing. Missouri still looks stable, and that's what makes this phase easy to misread. Stability on the surface can hide friction underneath. Activity can exist without momentum. Demand can exist without urgency. When that happens, traditional signals stop working, even though nothing appears wrong. This doesn't mean collapse, it means transition. The environment is changing before the numbers do. And when psychology moves first, outcomes follow later, often catching people off guard. If this feels familiar, you're not behind. You're early. You're noticing the gap between how the market looks and how it's starting to behave. That awareness doesn't require action yet, only attention. Subscribe and hit the bell. Slowdowns start quietly. On paper, Missouri should be moving faster right now. Prices are still lower than the coasts. Job markets feel comparatively stable. The state sits in the middle of the country, insulated from extreme swings with space, affordability, and a cost of living that once felt like a built-in advantage. For years, migration narratives pointed here as a logical release valve for overheated markets elsewhere. By traditional logic, momentum should be obvious. That's exactly why the slowdown feels confusing. The old assumption was simple: affordability plus stability equals demand. If homes are cheaper and life feels manageable, buyers will act. But that equation no longer works the way it used to because buyers aren't optimizing for price alone anymore. They're optimizing for outcomes. Modern buyers evaluate risk-adjusted livability. They don't just ask whether they can afford the home. They ask how resilient the decision will feel if conditions shift again. What happens if job flexibility disappears? How easy would it be to sell or rent later? Does this location preserve options or narrow them? Those questions matter more than geography on a map. This creates quiet cognitive dissonance for sellers and observers. Everything about Missouri feels like it should generate urgency, yet buyers hesitate. Not because they dislike the homes or the state, but because affordability without adaptability feels incomplete. Lower cost doesn't automatically translate to safety if the path forward feels rigid. Buyers have learned that value and safety aren't the same thing. A home can be a good deal and still feel risky if future flexibility feels thin. That's why momentum stalls even when prices look reasonable. Waiting doesn't feel dangerous anymore. It feels prudent. Missouri's stability, once a strength, now creates friction in a different way. When markets move slowly, buyers assume they have time. When they assume they have time, urgency disappears. Demand exists, but it doesn't convert quickly. And without conversion, movement slows regardless of fundamentals. This isn't fear driving the pause. It's discernment. Buyers are comparing scenarios, not listings. They want decisions that remain workable across different futures, not just attractive today. When that confidence isn't obvious, even affordable markets feel heavier. That's the shift most people miss. Missouri isn't failing to attract interest. It's failing to create immediacy in a world where immediacy no longer feels required. And until that distinction is understood, the slowdown will continue to feel mysterious instead of structural. Stay with us. Affordability isn't momentum anymore. The Missouri buyer most sellers are waiting for doesn't exist anymore, not because demand vanished, but because the mindset that once drove decisions quietly changed. The old buyer was value-driven, decisive, and long-term oriented. When they saw a home that fit their budget and lifestyle, they acted. Affordability felt fleeting, and waiting felt risky. Buying wasn't just a transaction, it was a commitment to stability. That buyer was shaped by predictability. Rates moved slowly. Jobs felt secure. Housing felt like a one-way door you stepped through and stayed behind. Missouri fit that story well. You bought, settled, and planned forward. Speed wasn't impulsive, it was responsible. Decisiveness signaled maturity, not recklessness. Today's buyer is built differently. They are verification-driven, optionality-focused, and patient by design. They don't assume stability. They test it. They don't rush to lock in outcomes. They stress-test scenarios. Where the old buyer optimized for value over time, the new buyer optimizes for flexibility across outcomes. This shift didn't come from fear or headlines. It came from experience. Buyers learned, repeatedly, that waiting worked. They watched listings sit. They saw sellers adjust. They realized patience didn't punish them. It improved their position. That lesson rewired behavior at a deep level. Once learned, this conditioning doesn't fade quickly. People don't forget that restraint creates leverage. They don't unlearn that flexibility protects them when conditions change. Even when narratives improve, the memory remains. Urgency is no longer assumed. It's optional. This is where Missouri sellers feel the disconnect. They still expect decisiveness because that's what worked before. They interpret hesitation as uncertainty or lack of interest. In reality, buyers are engaged internally. They're verifying assumptions, modeling exits, and protecting optionality before committing emotionally. The old buyer trusted the market to carry them forward. The new buyer trusts themselves to adapt. That identity shift changes everything. It changes timelines, risk tolerance, and what feels safe. Missouri homes aren't being rejected. They're being evaluated under a new rule set. Waiting for the old buyer to return is the mistake. That buyer didn't disappear. They evolved. They learned that speed isn't protection anymore, and markets can't force people to forget what worked. Understanding this isn't pessimistic, it's clarifying. Buyers aren't pulling away emotionally. They're applying a learned discipline. Until sellers recognize that permanence, behavior will continue to feel confusing rather than informative. Hit the bell. Buyer psychology doesn't rewind. Missouri homeowners are seeing activity and assuming strength, and that assumption feels reasonable until it quietly fails. Showings happen, messages arrive, agents report interest, and nothing sounds alarming. Homes feel busy, and busyness is mistaken for momentum, even though momentum requires commitment, not conversation. Showings without offers are the first quiet signal. Buyers walk through, ask thoughtful questions, nod politely, and then disappear. Sellers tell themselves buyers need time. In reality, buyers are collecting information without emotional buy-in. Attention no longer means intent. It means evaluation. Polite disengagement deepens the illusion. Feedback stays kind and vague. Nice layout, good location, still thinking. Courtesy replaces clarity. In low-urgency markets, buyers rarely reject homes directly. They step back softly. Silence becomes the safest exit because it avoids confrontation and preserves optionality. Days on market stretch next, not dramatically, just enough to feel uncomfortable. 10 days becomes 30. 30 becomes 60. Sellers remind themselves Missouri has always moved slower. But time carries memory. Each extra week subtly reframes a listing from opportunity into option. Options favor buyers, not sellers. Late-stage deal failures add confusion. Contracts get signed, optimism rises, and then inspections, appraisals, or financing stall the process. Sellers blame bad luck. Buyers absorb caution. Every failed deal trains the next buyer to hesitate longer and negotiate harder. Social proof reverses quietly here. Activity once signaled desirability. Now it signals availability. Buyers assume if a home has not moved, someone else already tested it and walked away. Silence becomes information rather than reassurance. This is why calm can be dangerous. Sellers wait for rejection that never comes, believing patience protects value. But waiting quietly transfers leverage. Buyers grow more confident delaying. Sellers lose urgency without noticing it happen. Nothing about this feels aggressive, which is why it works. Missouri does not produce loud exits. It produces quiet disengagement. Buyers do not announce they are leaving. They simply stop leaning in. Missouri markets amplify this effect because they are trained on stability narratives. When nothing appears broken, sellers assume nothing is changing. But buyers interpret stability differently now. They see it as permission to wait. The absence of pressure tells them opportunity will still exist later. That belief reshapes behavior quietly. Decisions slow. Leverage drifts. And because the shift feels polite, it is easy to dismiss until the consequences arrive. By the time clarity replaces comfort, sellers often discover that the market already adjusted without asking for their permission or offering warning signs or signals. By the time sellers realize silence was not strength, time has already done its work. Choices narrow. Adjustments feel heavier. Understanding these signals early does not require panic. It requires interpretation. Subscribe. Silence is not confidence. Missouri does not slow everywhere at once. It slows in familiar patterns that repeat quietly before prices ever move. Buyers disengage first where flexibility is thin, narratives are fragile, and exits feel narrow. These areas do not fail dramatically. They simply lose momentum first, while everything still looks fine there. Long commute suburbs feel affordable until time becomes the cost. Buyers accept distance during urgency, but patience exposes friction. Extra minutes turn into years imagined. When schedules change or flexibility matters, distance stops feeling temporary. The house stays the same, yet tolerance shifts, and hesitation quietly replaces enthusiasm for buyers. Investor-heavy outer rings slow early because momentum once carried them. When appreciation cools, investors pause instead of negotiate. That pause removes invisible demand. Owner-occupants sense exposure. They begin imagining resale risk rather than upside, even while prices hold, and confidence thins without needing any headline or public alarm. School-dependent value zones follow closely. These markets rely on future payoff stories. Buyers once accepted paying ahead for certainty. Now they question timing. Enrollment shifts, tax support, and long horizons feel uncertain. When confidence in compounding fades, waiting feels safer than committing early, without urgency or pressure today there. Another early friction point appears where fixed costs quietly rise. Insurance, taxes, and association fees feel manageable individually. Together, they reshape affordability psychology. Buyers underwrite long-term costs now. When predictability weakens, homes feel like obligations, not flexible assets, even at modest prices that once attracted confident buyers here initially. What ties these places together is not fear or decline. It is structural fragility. Each relies on one narrow assumption holding: stable commutes, liquid demand, reliable narratives, predictable costs. When any assumption wobbles, buyers reassess quietly, redirecting attention without confrontation or explanation, because alternatives still exist nearby today for them. Buyers picture exits earlier now. They imagine future conversations, not move-in day. Who buys next? Under what conditions? How quickly? When answers feel narrow, enthusiasm fades. This filtering happens before emotion attaches, making disengagement feel calm rather than dramatic, and sellers rarely notice until later when leverage has shifted. This is why Missouri does not break loudly. It reallocates demand quietly. Flexible buyers leave first, leaving behind those with fewer options. That composition shift matters. It changes negotiations later, even if prices appear stable and headlines stay reassuring for sellers who wait too long to adjust their strategy accordingly. Sellers miss this because nothing collapses immediately. Listings still show, prices still print, but the buyer pool thins selectively. Those most able to wait step back first, leaving demand that is slower, narrower, and more conditional than homeowners expected based on past cycles in Missouri. Suburbs right now today overall. Recognizing these patterns early is not pessimism. It is literacy. Markets always signal through behavior before prices respond. Missouri is no exception. Understanding where slowing starts allows control to remain with those paying attention while others wait for confirmation too late from charts, headlines, and price cuts that arrive afterward. This phase rewards calm observers. It does not demand action yet. It asks for awareness. Buyers already adapted. Sellers who notice now retain choice later, without urgency or regret, because they saw structure before emotion forced decisions in markets that appear stable today across Missouri right now for most people. Prices across Missouri haven't dropped yet, and that stability feels reassuring to many homeowners. It looks like confirmation that nothing fundamental has changed. But price stability here is misleading, because price is not the signal that moves first. Behavior is. And behavior has already shifted quietly beneath the surface. One reason prices lag is anchoring. Sellers remember the last clean sale, the neighbor's closing, the number that once felt fair. That figure becomes identity, not data. Adjusting it feels like admitting loss, so waiting feels safer. Patience protects self-image even as leverage drifts away without confrontation. Low distress reinforces this delay. Many Missouri homeowners have fixed rates, manageable payments, and no urgent reason to sell. Without pressure, listings don't collapse, they linger. Sellers read that as strength. Buyers read it as flexibility. When no one needs to act, buyers learn they don't need to rush. Comps add another layer of illusion. Comparable sales look backward by design. They reflect yesterday's decisions, not today's hesitation. A market can slow for months before the data acknowledges it. By the time lower numbers appear, behavior already changed. Buyers understand this instinctively, even if sellers don't. Seller patience feels rational, but it has a cost. Time becomes the invisible variable. Each extra week reframes perception. Buyers stop asking whether a home is valuable and start asking why it hasn't moved. Offers arrive with conditions instead of competition. Negotiations stretch. Leverage drains without price moving at all. This is why prices move last. A price cut is a public admission that belief shifted. Sellers resist that moment as long as possible. Meanwhile, buyers adjust strategy quietly. They wait. They compare. They test. They know that when behavior softens, numbers eventually follow. The danger here isn't falling prices, it's shrinking options. By the time prices adjust visibly, flexibility is often gone. Sellers feel forced, buyers feel confirmed. That shift happens calmly, without headlines or panic, but the outcome is just as real. Understanding this doesn't require fear. It requires attention. Missouri markets aren't immune. They're simply slower to reflect change. Buyers already see the sequence. Sellers who recognize it early keep control. Those who don't discover it later when choice feels narrower than expected. Watching behavior early gives sellers time to decide instead of react, preserving dignity, flexibility, and leverage long before numbers force uncomfortable choices on their own terms. Subscribe. Prices follow behavior, always. When a market slows, most people feel lost before they see opportunity. They focus on what isn't happening instead of what just became possible. But slowdowns don't remove leverage. They redistribute it quietly toward the people willing to adapt while others wait for old conditions to return. Adaptive sellers feel this first. They stop chasing yesterday's signals and start responding to today's behavior. Instead of interpreting fewer offers as rejection, they treat it as information. They clarify pricing logic, reduce friction, and make decisions early while options still exist. That calm realism doesn't weaken their position. It restores trust, and trust is what still moves deals when urgency disappears. Patient buyers gain control at the same time. Without bidding wars or compressed timelines, they can evaluate clearly and negotiate respectfully. They don't need to prove seriousness through speed. They prove it through preparedness. Optionality becomes their advantage. Walking away no longer feels like failure, it feels like discipline, and that discipline creates leverage without aggression. Long-term operators sit between these groups. Investors, relocators, and planners understand that quiet markets reveal structure. They watch what closes, not what gets attention. They study where deals fail, not where listings look busy. As noise fades, mispricing becomes visible and risk becomes measurable. That's when decisions feel deliberate instead of forced. What connects all of them is composure. Control no longer comes from moving first. It comes from understanding conditions better than others. Transparency matters more than optimism. Timing matters more than boldness. When fewer people are competing, clarity becomes the currency that matters. This shift challenges identity. Many people associate confidence with action. But in markets like this, confidence shows up as restraint. Calm operators don't rush to validate themselves. They let behavior reveal reality, and they respond before pressure builds. Nothing here requires prediction. It requires orientation. The slowdown creates space, not collapse. Space to choose instead of react. Space to decide while options remain open. Those who recognize this aren't early or late. They're aligned. Stay with us. Clarity is leverage now, and it rewards those who notice before returns. Missouri isn't weak, and it isn't being left behind. What's happening now is quieter and more important than a headline ever could be. Buyers aren't rejecting the state. They're stepping away from assumptions that once felt automatic. That affordability guarantees momentum, that time is neutral, that interest eventually converts on its own. Those beliefs worked before. Now they're being renegotiated. That's why this moment feels confusing rather than frightening. Listings still exist. Prices haven't collapsed. Neighborhoods still feel familiar, yet decisions slow, conversations stretch, and commitment thins. Nothing dramatic breaks, but something essential shifts. The market isn't losing value first. It's repricing psychologically, one hesitation at a time. This distinction matters. Psychological repricing always comes before numerical repricing. Buyers adjust behavior long before sellers adjust numbers. They wait, compare, and test without urgency because they've learned patience protects them. Missouri isn't failing this test. It's simply revealing which assumptions still hold and which no longer do. If you've been paying attention, you're already seeing it locally. Homes that attract interest but not offers. Deals that stall late. Silence replacing rejection. These aren't signs of collapse. They're signs of recalibration. Buyers are asking different questions now, and markets answer those questions slowly, through behavior rather than announcements. The difference between feeling prepared and feeling blindsided comes down to observation. Reactors wait for confirmation, for prices to move, for headlines to change. Observers watch behavior, tone, and effort. They notice when urgency disappears and optionality grows. That awareness doesn't demand action. It preserves choice. I'd encourage you to look at your own corner of Missouri with this lens. How long are decisions taking? Where does patience show up? Where does silence replace momentum? Share what you're seeing, because patterns become clearer when they're compared, not faced alone. In the next video, we'll talk about how time eventually forces price, even without panic, even without fear. How markets resolve pressure quietly, through patience and positioning rather than drama. Stay subscribed. This cycle rewards the prepared, especially those willing to observe early, stay grounded, and act from clarity instead of noise. This moment doesn't ask for certainty or prediction. It asks for awareness held long enough to matter. When assumptions change quietly, readiness becomes the advantage that compounds. Those who notice early don't rush or freeze. They stay present, flexible, and calm, while others wait for permission that never arrives, quietly, patiently, prepared.